Alright guys, let's get started. Welcome to another episode of Crypto Corner, your crypto radar for all the latest news, reviews, market analysis and tutorials that help you master the crypto markets. My name is OJ and today I'm doing a quick update on Bitcoin because Bitcoin again got rejected from a major resistance, and again it's falling below the 50th moving average on the daily, which is important level for me. I'm really looking at the 50th and the 9th moving averages. I actually shared my strategy with you using moving averages. There are a few moving averages that I'm following, and it's EMA, it's exponential moving averages that I'm talking about. But definitely when we are below the 50th EMA on the daily, this is for me not a good, it's a very bearish scenario, let's say, and a lot of the times I'm actually avoiding trading when we are below the 50th EMA. For the moment, I'm actually doing swing trading in the shorter time frames because the longer time frames are not looking very good. So let's take a look at the charts, but before that, a quick disclaimer that these are my personal views. This is not financial or investment advice. I give you my personal opinions and my commentary on the markets so that I can help further your research. So with that said, let's go into the charts and see what I'm seeing for Bitcoin. One of our sponsors is PrimeXBT, an award-winning multi-currency trading platform which offers access to various markets, including cryptocurrencies, loads of forex pairs, also commodities and indices, which means you can diversify your risks by having exposure to non-correlated assets. They offer different leverage percentages on the different assets, and in order to provide the highest level of liquidity and instant order execution, PrimeXBT aggregates feed from 12 industry-leading exchanges and feed providers. More importantly, PrimeXBT is the exclusive home to co-vesting, a peer-to-peer copy trading module that features a 5-star rating system and global leaderboard that provides various metrics to take into account when choosing whom to follow. This is an automated trading feature that allows novice traders to leverage the skills of more experienced traders and collect profits in a hands-free, done-for-you type of a system. I have been using this throughout the year already. I like to be able to tap into markets that I personally don't know very well and I don't trade myself, like oil or gold for instance. Another thing I really like about this exchange is the freedom to use it without having to share your ID or other sensitive data. KYC is not obligatory, and they have some of the lowest fees on the market as well. You can also use their co-vesting yield farming service and earn annual yield on your crypto assets, including stable coins. Percentages vary according to the amounts locked, so check them out. I also have a welcome bonus code that is in the description below, so give it a try by using the links in the description below. And right now you can take part in their money winning contests. They just launched a whole contest marathon with weekly and monthly rewards. You can take part in this even if you've never used the exchange. All entrants work with dummy accounts, which means that there is no risk for you. You are allocated funds to use for these contests, and if you rank high and win one of these prizes, you actually win real money. So there's nothing to lose but a lot to win if you do. Give it a try. The link to find out more is in the description below. Alright, so let's start first with the shorter time frames. This is the 4-hour. Actually, let's go to the 1-hour first and see what's happening here. Well, here we actually have a bullish cross on the MACDs. So in the short term, we could be going up, and it makes sense to go up because after this heavy drop over the last day, of course, we are now going to bounce upwards. And we're going to try and come all the way here to the 100 moving average. This is the purple line is the 200, the red line is the 100 moving average. This is where most likely we're going to find resistance. Before that, we have the 50th moving average, so even this could be a resistance. This is at 39,700, but I feel that it makes sense over the next couple of days or something to actually go above this and try to get to this price level here, which is at around 41,000. But since both of these moving averages are around this price level, this is definitely going to be our resistance where we're going to find a strong rejection. So this gives me a good opportunity for a swing trade. I actually accumulated yesterday at these price levels down here at 38,700, 500. I had a few different orders, but I'm now ready to sell as soon as we get to a point of rejection. So wherever the resistance is, we'll see how the 50th moving average is going to act. If this is broken easily, then I'm gonna wait and I will use this rejection here, because these two moving averages are definitely going to be a resistance. This is probably where I'm going to unload. And I'm going to unload because right now the long term is not giving me enough confidence. Now let's go to the higher time frame so that we can see the longer term. Now on the 4 hours, it's actually quite evident that we are making higher lows and higher highs. So this is good. But again, this is in the short term. And yet again, here we are also below all of the moving averages. Literally, all of the important moving averages, we are below them. So we'll have to come and reclaim at least the 9th moving average. This will be easy. But then we have the 50 and the 100 and the 200 moving averages that are all coming at the same time here, and they're acting as a resistance. So 41,000 is going to be almost impossible at this point. We are definitely having a lot of pressure from the sellers. As soon as we come to that level, they will be looking at these moving averages as well. They will be, using this as this resistance as a time to sell, and I will be one of them as well. Okay, so let's go to the 12 hour. The 12 hour is giving me this bearish cross on the marketcrash. So this is not good news. So the longer term, as we get into the longer term, we're actually starting to look even more bearish. We are below the 50th moving average, and the 9th moving average is now going to cross it on the downside. So this will be a bearish cross. So this is actually bearish. And then as we go on the daily, we look even more bearish, because on the daily we are below the 9th and the 50th moving average, and they're making this bearish cross, which is also bad news for us. So definitely, as we lost the 50th moving average, as you know, on the daily, for me, being below the 50th moving average is a no trade zone. I don't like trading when we are in this zone. So I did accumulate at the dip, but this is a short-term swing trade that I'm making. So I'm not doing that trade on the daily. I'm doing that trade on the 1 and the 4 hour time frames. So it is a short-term time frame. So in the longer term, this is another bearish scenario here that I'm seeing. Also, at the same time, the moving averages of the marketcrash are also starting to get very bearish. The blue one is going to cross the red line any moment now. And this will be a bearish cross. It will be on the downside. It will be a bearish. This here is a bullish cross. This one here is a bearish one. So we are about to make the same bearish cross that we saw here. And this was on the 18th of February. Let's take a look at the price on the 18th of February. It's this. So basically this downtrend here, this drop, was reflected in that bearish cross of the marketcrash. So we are about to do the same here. I'm not saying it's going to be an exact repeat of this, but it's definitely a bearish scenario. And at the same time, we have printed a triple top here. So 3 times we actually came to this price level and we got rejected 3 times. So this is yet another bearish outlook. Not great. And then as we go on the weekly, now on the weekly, first of all, we have a double top. A double top is bearish, but at the same time, we have this channel here that we formed, and typically this is a bullish formation because it is a continuation pattern. However, this is not enough. This is only one indicator that is looking bullish, but we are below the 9th and the 50th moving average. They're acting as a resistance. During this last pump that we did, for the last few days, as we were pumping, we actually came to the 50th moving average and we got rejected from it. So as we got rejected from it, we fell below it. We even dropped below the 9th, and we have that bearish cross on the 9th and the 50th anyway. So definitely this is not bullish. At the same time, we could actually go higher in the shorter term. So because this is the weekly, when I say shorter term, it could be, quite a few weeks. It could be for the next month. We could still go higher and then drop again. And one thing that I really don't like about this pattern here is that we have, in fact, a hidden divergence. Basically, we're having price going upwards. At the same time, the RSI oscillator is going downwards. This is a bearish divergence. And this is a very strong bearish divergence indicator. So this here in the macro, in the longer term, is actually not looking good at all. The only good thing is that we have established this support and we so far haven't broken it. So until we break this support, things are looking fine, right? But we are so close to it, and breaking below this support on the weekly, that this is a support that we've been building all the way since May last year, since last summer, when we actually had the first correction of the market. So since then, we established this support line. This is a trending line. We confirmed the direction of this trend line as we dropped back in January to here, and we stopped. So this is how we formed this support, this upwards going support trend line. However, we can break it very easily because we are trading close to that line for quite some time now. So unless we actually go higher very soon, we are at a risk of breaking this trend line. So this is one scenario that could happen. We could actually just consolidate for another couple of weeks or even less, and then we can break on the downside. And the fact that this is very likely to happen is because we are below the 50th moving average. And while we are trading below the 50th moving average, this is bearish. So we really need to find the strength to break above this 50th moving average so that we can do another rally upwards. And then there is another scenario which is still bearish, but it is better for the shorter term, and not even the very short term. Now this scenario looks like that. So basically we are forming this channel here that is a bullish formation, but at the same time, what could happen is that we could go yet again here, and as we get rejected, dropping down here will actually form a triple top. This triple top is a very bearish formation. It's a very bearish pattern. So as we form this triple top, we could actually drop even lower, and this could take us all the way down to below 20k, because this is typically what this pattern is predicting. So this could develop over the coming 2 or 3 months. You know, this would take March and April and even May, all the way to May, for this to form. So it's not immediate, it's not really that soon that will happen. And if this happens, we would still have some time here in the upper region to unload and to make some profits from it. So this is probably the best outlook here. But definitely the macro right now, even though we are still bullish while we are making higher lows than previous ones and higher highs than previous ones, we are still at the risk of breaking this support, going lower, or at the risk of going higher first, then getting rejected, forming that triple top, and really getting lower. So both of these scenarios are actually bearish in the longer term. Which one will be? I don't really know. But for the moment, I'm actually trading short term. I'm focusing on the shorter time frames because we really need a strong confirmation for a bull rally before we can have the confidence to look at the longer term. So while we are doing these kind of, higher lows and higher highs in the short term, I'm taking advantage of these price swings, and I'm not really looking in the very long term at this point. Also, the war situation right now is really a time of uncertainty and a time of fear. So these are times when, the markets are also being a little bit erratic. I mean, one day the market is doing, 2 days the market is doing these big green candles, and then just 2 days later is making the same red candles this time. So the market sentiment is really jumping up and down very quickly, very easily moved. People are getting scared, then they're getting positive and optimistic, then they're getting pessimistic again. So this is really what's happening. This high volatility is actually good. You can make money in this kind of volatility, but you have to do it in the shorter term. And I'm typically a long-term trader. I'm a position trader. I don't really like swing trading so much. But at the moment, swing trading seems to be the best practice. So with that in mind, this is the 4-hour chart. What I would do here is what I'm expecting, for Bitcoin to do here. Let me just see. This is the most recent price action from the recent low to the most recent high. What we see is we actually perfectly bounced from the 0.618 Fibonacci level, which is to be expected. This is usually a stronger support. We bounced up. Now we have the resistance at the 0.50 Fibonacci level, which is at 39,600. Then we have the next resistance, which is at the 0.382 Fibonacci level, which is at the 41,000. This resistance here is the stronger resistance. This coincides with the 50th and the 200 moving averages. They are both right now pretty much at the same level. Even the 100 moving average is also around here. So all of these three moving averages are concentrated around this price level. This is why I'm saying that this for me is the actual resistance, the strong resistance. This is where we're most likely going to get rejected. So in this swing trade that I've just taken, I've already accumulated Bitcoin yesterday. I used all of the stable coins that I had. I jumped into Bitcoin and Ethereum, and I will be waiting for us to approach this resistance line here. At this point, I will unload. Of course, I will monitor what the price action is doing, how strong we are as we approach this, if the bulls are actually taking control of the market. But I don't expect the bulls to be really taking control of the market at this point. I expect us to find a strong resistance. This is why I will sell here, and then we'll see how it goes. We'll see how far we can drop. On the way down, we can actually drop to 36,000. But I don't expect this to happen immediately. First, I'm expecting that we will do a decent bounce, and as we get rejected, only then we're going to drop. And as we drop, we could actually just get stopped at the same price level, at the same 0.618 Fibonacci level, and establish this as a strong support. However, I don't believe that this support is going to hold us for too long. As we come to test it again and again, most likely we will break it. And because currently the overall sentiment is quite pessimistic, people are still quite fearful. People are exiting their positions in order to be able to have some cash at hand in case that, the worst happens. We are talking about even nuclear war right now. I mean, this is really the end of the world for many. So this is why right now, I'm not expecting the bulls to take a strong control of the market, and I'm expecting that we will come to test this level yet again, and quite possibly we can break this level. So going to the lower support is still a very likely scenario. This is why I'm cautious. This is why I'm trading short term right now. But definitely a bounce from this level is due, and it's already happening. We're starting this bounce. Look at the RSI. The RSI is really on the low end. This is a very oversold RSI. I mean, not very, it could get even more oversold. I'm not saying severely oversold. I mean, in my language, these are not really the correct terms. Nobody is using these terms, but that's for me, this is how it makes sense. So right now we have a very oversold RSI. We could go lower and get into a severe region, but it is not. I mean, touching this bottom line here, this is already very oversold. So in the short term, I'm expecting a decent bounce, and I will be using that to my advantage. Hopefully you will be using it too. Alright, well, this wraps up today's episode of Crypto Corner, everyone. Thanks for staying until the end. I hope this brings you value, and if it did, please share it with someone else who will benefit from watching this. Also, if you want more crypto content like this one, make sure you're subscribed to this channel and show your support by leaving a like and a comment below. This will help the algorithms pick up this video so that it can reach more people. Also, make sure that you check out the links in the description below, where I list all of my top crypto services, exchanges, wallets, my top charting tools for market analysis, and my 2 ebooks that will help you get a better understanding of everything in the blockchain space. I also send out the Crypto Corner newsletter, where I share with you market insights every 2 weeks, in the beginning and in the middle of each month. So grab the link from the description below and join my mailing list. Trade carefully and stay profitable.